Hello, good morning, everybody, and welcome to the second day of this GRASPI conference. I'm very honored to be here this morning to talk about stewardship with you and how it's a tool that can be used by investors all over the world to advance our sustainability agenda. So you may have heard probably read around concerns around sustainable portfolios and how effective they really are in the real world. And one way to deal with these concerns is to have a very proactive, sustainable agenda, sustainability agenda for such portfolios. And today I will present in a minute, but we have people who are driving that sustainability agenda on a global basis, on a regional basis, and really talking to companies and governments. And we will look at how where policies come from, how they're made, and how they can then be implemented, giving you real life examples of how that is done by these different people. So to start, the first person I will introduce is George Dallas, who's the policy director at the International Corporate Governance Network, and he's been there since 2014. And he coordinates governance policies and committees. And just to give you an idea of the clout that this group has, globally, the initiative is made up of investors who are responsible for more than $55 trillion. So that's quite a lot. Hello, George.
Hi.
The second person who's here is Valerie Kwong, and she is at the Asia Investor Group on climate change, and she's the director overseeing corporate and investor initiatives, including the Global Investor Engagement Initiative called Climate Action 100+. And globally, this initiative is made up of investors responsible for more than $55 trillion. So again, a sizable amount. Michael Herskovich is the global head of stewardship. Sorry, welcome, welcome, Valerie. Hello.
Thank you.
And finally, we have Michael Herskovich, who is the global head of stewardship at BNP Paribas. And his main claim to fame is that for the past 10 years, he's been in charge of voting on the majority of equity assets under management for the clients of the asset manager. Who is a member of both the other organizations I spoke of, ICGN and AIGCC, where George and Valerie are. So
good morning, good afternoon, depending where you are.
Thanks. So just to kick this off, I thought we'd go into a bit of history. So I'm George, who looks into policies and things like that. Can you tell us a bit more about how stewardship, that used to be really more based on corporate governance, has expanded to cover many other issues, including climate change?
Sure. Thank you. And it's great to be part of this conference. And yeah, as you say, ICGN is an investor body. So we have two major priorities. We try to focus on good corporate governance in companies that we invest in, but then looking at our own selves, we try to focus on institutional investment as a sector, as ICGN, and to try to encourage stewardship and appropriate investor behavior on our side as well. I think it's important to remember that stewardship is not that old, at least in terms of having been codified in something that's called stewardship codes. This is really only about 10 or so years old. The first formal stewardship code was in the UK. I think it was 2010, 2011. And now there's around 20 in the world. In different markets, developed markets, emerging markets, frontier markets. So it really is beginning to take shape, but I would also say it's early days. And Sheila, I think your point about how has stewardship evolved over this period of time is an interesting question. I think you're right. It focused, I think, initially out of the blocks on governance of companies. In some ways, stewardship codes were a response to the financial crisis of 2008. And investors were, accused of not doing their own job and looking after the equities that they were investing in. And so I think that it's the original focus was on equities. It was on more corporate governance types of issues, whether it's pay or whether it's who do we elect to the board of directors and these types of things. But you're right, over time, it has evolved. And again, you mentioned ICGN's members have 59 trillion in assets under management, which is substantial. I would argue, I don't have the precise figure, but I would guess around 2/3 to 3/4 of that would be long-term, either pension funds themselves or asset managers managing on behalf of pension funds. And so that builds with it a very long-term, at least it should bring with it a long-term perspective. And what I think that, just to get to your point, Sheila, I think that this, as we're beginning to focus on what are the issues that affect companies in the longer term, yes, boards of directors and pay packages and all these traditional governance elements are very important, but so are sustainability issues. Looking first and foremost, as an investor, how does sustainability, whether it's climate or other types of sustainability issues, affect the company itself? And then now that we're starting to, particularly in Europe with the concept of dual materiality, I think the idea is how is it also affecting other, what types of impacts, positively or negatively, are they taking? And just, so I think this is part of the agenda. This is part of long-term thinking for investors. I would say that when we first published our own global stewardship principles in 2016, we had ESG integration as one of our 7 principles. And at that point in time, like if you look at the other, the UK's stewardship code at that time, it was silent on that. And so we're starting, I think that, but now that's part of the fabric of the UK, and many other parts of the world are beginning to embrace sustainability issues as part of the stewardship agenda. And I guess that one of the other things I would say, just to kick things off in an historical context, is that stewardship initially was focused on equities, as I think I mentioned earlier, but now it's also extending into other asset classes, which will include, bonds or debt and other types of asset classes too. And I think that the same discipline, the same focus on stewardship and sustainability is increasingly building, not just in the equity asset class investors, but up at in other asset classes as well. So I think I'll stop now as an introductory statement, but this is part of the framework. It's certainly part of how we're looking at stewardship in terms of our responsibilities and our members. And I think that it's reflecting, I think, in many ways, how the investment industry is looking at things.
So thank you very much, George, for this introduction. It's true, it's relatively recent. If we say that it's really come out in the past 10 years, and so there's 2 aspects to stewardship. One is the sort of classic voting, which we will get to, and where we know we can be really effective. But there's also we as asset managers. So I'm at BNP PAM, so I know what we do there. We can talk to a company and tell them how we see them and how we think they are and where they should go, and maybe they will listen to us. But we will always be far more effective if we talk to a company telling them, we're telling you this, but in fact, behind us, we have several trillion members who agree with us totally, and who are talking, who are behind us, and who may act if you don't change your ways. So here I come back to you, Valerie. Through the AIGCC, you are really involved in the global, Climate Action 100+. So maybe you can tell us a bit more about the initiative and how it's going, how it applies to Asian companies.
Certainly, and thank you so much, Sheila, for having me. It's a pleasure to be here with other distinguished speakers as well. So I probably should start with a brief introduction to the initiative before going into the details of how that's like in Asia. The Climate Action 100 Plus initiative, it's coordinated by 5 regional networks. So AIGCC is one of them. And the overall progress and development of the initiative, it's supported by a global steering committee, to which it is the chairing of that committee is on a rotation basis across different regions. And each of the regions, we will have an investor representative and a network CEO supporting that. So where we're now at, for example, we now have the Americas chairing the initiative, and after 6 months, they'll pass on to Europe and then to Asia and so on. So that is sort of the rotation that rotation mechanism that we have in place. And I think this is critically important for an initiative of this nature, being a global initiative, because there are the priorities and needs of different regions that needs to be adequately addressed. And I think this should be reflected on the overall structure and also through the rollout of various programs of work that we have. So as mentioned, we are currently a coalition of investors responsible for over $55 trillion under management. And it's really important to note that any progress that is made as an initiative is a result of the investors engaging with the companies in collaboration with other investors. So sort of diving deeper into how that looks like in Asia, I think this is a very interesting area, and one of which I think we can have a standalone session on with a deep dive 1-hour discussion. But as a start, I think we should first establish and acknowledge that within Asia, we have markets that are structured very differently. So all of these markets, they are nuanced in their own ways. And as a result, the engagement tactics that we talk about, they need to be deployed quite differently because the likely effects of different tactics as we sort of deploy these tactics in different regions, the outcomes of that will also differ. So some markets are more open to tactics that may be slightly more towards the forceful stewardship end, because the market structure, it's there. It's also likely because there is already existing dialogue on climate change in the public sphere, and hence they are more ready for that. Whilst in other Asian markets, we need to be really careful in the way we construct private dialogues and focus on accessing senior buy-in to convene, to be able to have interactive conversations with the senior level people within the companies. And I think that's a key driver to the engagement in Asia, because we need to prioritize on ensuring that we have these constructive conversations that go on. And perhaps just to lightly touch on how, in particular, perhaps there will be interest on how that's like on state-owned ownership companies, for example, because in Asia, we have a lot of companies with controlled ownership. And again, having that conversation starting at the top is critically important. And we also need to be aware of the right policy settings that are in place before we have those discussions. And from that perspective, I think it's not so unlike other engagements, because having that senior level buy-in will always help us go a long way. However, in Asia, if we look at the time scale, it certainly is at a different place because we are having these earlier stage conversations, whereas in other regions, maybe we've already had these at those levels in previous, in earlier timeframes already. So I think the critical piece for Asian engagements is that we need to ensure that we have, to be able to have that level of access, we need to have local investors in the composition to help convene these conversations. So without this relationship, I think it will be quite difficult to convene some of the conversations that would otherwise be quite difficult to start. So I'll stop there.
And then so on SOEs, I mean, where we don't have that much clout, I mean, is there also are there also efforts made to talk to governments who ultimately are in control of the SOEs? So on the public policy side, are you also developing actions there?
Yes, certainly. So on regulatory engagement, again, for different markets, it will look quite different, but certainly a lot of investors have expressed interest and also the necessity for us to also convene conversations at that level, because when we have these conversations with SOEs, understanding where sort of barriers are, if it's sort of in relation to national priorities, then that could be an issue in the engagements, and hence the next level of engagement at the policy angle will also be necessary.
Thank you very much. And now I turn to you, Michael. As an asset manager, how have you experienced this shift in focus from corporate governance to a wider range of issues? After all, you've covered exactly the same period as what George was mentioning, when it really started, when the stewardship code started to come out.
Yeah, thanks. Yeah, it's funny, by the way, that the fact that our title of the job 10 years ago was corporate governance or voting related, and now it's shifting towards stewardship. So that's reflecting also the change of the role of people like me, like us, that are working, used to be working mostly on voting issue, and now have a more stewardship, a larger angle. So yeah, I'm just going to try not to repeat what already George has mentioned as introduction, but I think that first of all, as a shareholder, I mean, governance, it all started with governance, and I think it's still the case. And I hear a lot in conference people saying that we should call GES, governance, environmental and social. Well, GES means another thing, so we are and it sounds better to call the ESG. But I think that governance has always been there and still is there, because it's probably at the basis of an organization. And in order to have a long-term sustainable strategy on a company, you need to have a framework, a governance framework that is a good one. So governance has been at the start and is always there. And also, as an investor, as a shareholder, you vote on governance issue, as Georgia was mentioning. You vote on the board, you vote on compensation now, you vote on financial operation, etc. So it's the basic right of shareholder. As a holder of a company, as an equity holder, you have the right to vote at general meeting on a lot of decisions that are mostly, at least historically, and we'll come back to that, governance issue. Then indeed, I mean, it started to change to a wider range of ESG by voting and non-voting items. By voting items, it started because we started to see environmental and social proposal at general meetings. I think that 2, 3, or 4 years ago, we had the first year where environmental and social proposal at general meetings were more important than governance proposal. And it didn't change, especially in the US, but not only. So starting to have more and more environmental, social proposal at general meeting to vote. And as investor, and that's what we have done, we have started also to take into account environmental and social matters on the way we decided to vote on regular, I would say, governance proposal. So to take into account, especially climate change related issues, on the way we're going to take into account a vote when we decided to oppose or support an election of the board, or the financial statements, or discharge of the director. So even through governance related topics, investors have started to introduce more and more environmental and social consideration to take into account this. And to give a concrete figures to what I'm saying here, if we look at the first half of this year at BNP Paribas Asset Management, 2021, we opposed to more than 900 proposals due to environmental and social consideration at 150 companies. And only on climate change related topics, it has been 700 resolution. And we are seeing more and more this trend of having vote like this by other investors. So pressure are coming to the election of directors, to other proposal in case of lack of climate change strategy, transparency, or whatever reason is behind it. And so that's only for the voting part, but clearly, I mean, stewardship has been larger, and we're going to talk more on the coming questions. But clearly, I mean, voting is one part, a key part, but more globally, I mean, stewardship is engagement with policymakers, engagement with companies, not only related to voting, but related to lots of matters related to sustainable issues, and as Climate Action 100 is a great example of the way also investors have started to work more collectively, and there are more and more collective action. Almost each month we have new initiatives that is coming up. So really the part that investors are talking with companies on sustainability issues. Investors now are organizing themselves collectively to talk with companies on sustainability issues, and not only on climate, but on other matters. It's something that has grown a lot on the past 5 years, with Climate Change 100 being the most famous example.
So thank you, Michael, very much for for all three of you for the experience you have in this area. And just coming back to George, who as you're in charge of all the policies and at the ICGN level, are there certain tools that you encourage your members to use more than others? Which do you believe are the most, do you have tools that you find are the most effective ones? And I don't know if there's any research out there that you may be aware of how efficient it is when investors file, say, on climate or other shareholder resolutions. Does that make things happen more quickly or in a better way?
Yeah. Okay. Well, there's a lot to that question. But the interesting thing about sustainability is that it's very company specific. The specific mix of factors that are relevant or material in a sustainability context, will differ from company to company. There's sort of an endogeneity issue that and so there's no one magic cookbook, if you will, or set of criteria to take a look at, because if you think, for example, the SASB, the Sustainable Accounting Standards Board, breaks the universe into 77 different sectors, and so I think if you're looking at sustainability, again, I think you have to have a bit of a sectoral perspective, because that's where the environmental and social issues will enter into the equation, and they will be different for different sectors. So there's no one particular set of tools to look at, but we are encouraging, and we certainly are supportive of the development of more rigorous, high quality, consistent, assured, ultimately ESG data. I think that's the building block. And I think that it certainly is something that part of our own advocacy, both for individual companies, but also at the public sector level, is to encourage this gradual consolidation of different ESG providers in something that's a bit more, hopefully in an ideal world, we'll have it all sort of one set of standards. I'm not sure we're going to get quite there. There may be 2 or 3 to work with, but I think that we certainly think that the ESG data point is important, and how that's ultimately managed and assured, and as the tools that investors can use then to make different types of investment decisions, which could be financial decisions. How do I value this company? How do I assess it as a credit risk? And how do we use these types of tools, whether you create different types of stoplight systems, or different types of risk management approaches to, you can put a portfolio. This is what I was at F&C before I was an investment firm, before I joined ICGN. We developed, and Michael, I suspect you probably have something like this too, a risk matrix that we would basically put portfolios of companies in that would try to, using ESG ratings and other types of proprietary data, to try to get some sense these are always very crude, but some sense as to whether a company is an outlier, either in a good or a bad way. And that can be, it can be a powerful tool, just if nothing else, to stimulate some sorts of dialogue with the company itself. If the company is a laggard in a particular area, that its peers are not, this is the type of this is an opportunity for investors to engage. And the one thing I would say though, Sheila, to your point about climate, what is it? Say on climate. I'm personally a bit, ICGN does not have its own position on this. I'm personally a bit concerned about if you make this standard across all companies, then it's going to lose, I think, a lot of its impetus. I do think that for certain companies in certain sectors, that can be a legitimate tactic to play, but I think it would be potentially, I think there would be some unintended consequences if we all of a sudden were to impose a say on climate for all companies. And there's different ways of engaging. Again, you don't have to do a say on climate. I mean, engine number one at ExxonMobil, that was great stewardship that had the effect of influencing who's sitting around the board table at Exxon. That's really good. And so I think that I think using tools and then also just, which will be both informational tools, but also the tools of engagement to try to perpetuate change where you identify issues is sort of the whole, is the heart and soul of this. And again, specialized votes might help in certain situations, but there are other ways to do engagement too.
Okay, thank you. Yes.
Can I just jump in on what George was mentioning, but and clearly adding a concrete example of what we have done on engagement of laggards or weak company is typically, I mean, part of a strategy and tools that we indeed, I mean, I've tried to develop for the last 6 months and year or so by trying to focus based on our own rating. We have 10 decile ranking of company based on ESG. If there are decile 10, which is our worst rating, there is a process for us, for the portfolio manager or the stewardship team to engage with the companies if it's on our portfolio. So it's exactly what George was mentioning, to trying to have, and of course we are not engaging only with those companies, but to have a form of a specific process for companies that we're investing on if they are clearly identified as more risky from an ESG perspective. So I'm just wanted to jump on to add what was George was saying.
For sure, that goes back to George's point as well. And I mean, I think we all agree that the basis for all of this that we're doing in sustainability, whether it be analyzing companies or talking to them and trying to convince them to do better, is we need the good data, good ESG data. That's kind of the basis. If we don't have that, we don't have anything. But of course, we don't necessarily have 50 years to establish the ultimate ESG benchmark that was taken. If you think of accounting standards, it took us 50 years to get to common accounting standards. We don't have 50 years. This is all a bit more urgent. So I think that it's very heartening to hear today how much collaboration there is through different platforms on the subject, so that we can all learn from the experiences of others. So I mentioned the say on pay, but then there are other types of shareholder resolutions that can be passed and maybe then duplicated on other markets in other companies. Of course, there's always the regional specificities around that. And to come back to Asia, because you've been a bit global here, Valerie, what are your views there? And can this type of activism or resolutions be applied in Asia? Do you have any examples around that?
Sure, thanks, Sheila. I think that's where I come in with that Asian lens. As I mentioned, Asia is very diverse. The tactics that work in a specific region may not necessarily mean that it works for all of Asia. So, but we have seen, for example, in Japan, some examples this year and the last of resolutions being filed at Japanese banks and corporations. But note that they're typically NGO-led initiatives. So we need to bear in mind that right now it's still being considered to be quite confrontational. So the deployment of these strategies and the target of which the resolutions are being filed against and which market we're sort of making this happen in, all of these considerations will need to think about that quite carefully, and also we'll need a deep understanding of the dynamics at work for that particular market. So I think this is where the nuances for each market really comes to play, and we need to pay attention to that because as George mentioned, otherwise there could be unintended consequences as a result of forceful stewardship in a setting that's not favorable for shareholder resolution to be filed. So with that sort of as a premise to the discussion of stewardship in Asia, then I think there are several things to acknowledge as we look into the various types of engagement tactics that we can consider in Asia. Again, speaking about this perhaps more with controlling shared companies in mind. And that is a few key points. First of all, we really need to optimize the conversations happening in private. I think people hear quite often that, yes, there are a lot of conversations happening in private in Asia, but what exactly is happening in there? And I think it's important that we need to set expectations right at the beginning of these conversations with companies. We also allow them the opportunity to ask questions and make this as much as a two-way dialogue as possible. And to understand the dynamics of that controlling shareholder. Is it a state-owned company or is it a family-owned business? Because that nuance will also give us helpful insight and in understanding how we engage, how best to engage with this company, because potentially there could be room for us to engage with that company and for them to step up on ambitions. But if it's a commitment that is somewhat contingent to where national priorities are, then we know where the red tape areas are. But all in all, I think the basics such as advanced planning into a meeting, as we go into a meeting, using an agenda that is being agreed on, and details even like the language that is being used, whether interpretation services are necessary. These things all are actually very important things to consider as well, and will go a long way to getting a meeting to a good start. And just two other things that I think we should mention is that the element of positive reinforcement where acknowledgement is warranted. I think we should try to use that as also a tactic, because in addition to these private setting meetings, it's important that we try to find out from the company, are they ready for more commitment, or is there something that the company is ready to commit on, and that investors would be able to amplify that through positive reinforcement? Because if we have that kind of a conversation, we then have the process of encouraging companies to set sort of heightened ambitions in their commitments, and through that process also to sort of take another step up to sort of encourage companies to consider sort of even higher ambitions as part of that ongoing process. But that's
maybe spark emulation as well. I mean, if one company says they're I don't know, proposing to become more sustainable, then maybe that'll push the industry, or other people will say, me too, I'd like to do that. Or is that also part of it? It's better than saying you're a bad boy and or a bad girl. And,
exactly,
right?
Exactly. There are these sort of ripple effects that there are with commitments that companies have made, and if sort of other Asian companies see that actually collaborative engagement is a very positive process, then it will sort of help the initiative overall. But just one final point to note on other tactics to consider is that voting really does matter, and this should be utilized as a tool, because Asian companies tend to be very sensitive to their percentages and even a small level of dissent that is being noted in for example, a vote for a specific director, then these small nuances will often be picked up. So it may not immediately result in a change, but then it sends signals, and which will then encourage companies to be more responsive to the engagements of the investors, and we find that a useful tool as well.
Super. So that's something you might recommend to your the members of your coalition as well, that they also vote sometimes in dissent. And maybe Michael, you on the practical level of working for an asset manager, maybe you have some examples of resolutions and how how we've shaped our voting policy at BNP PAM.
Sure. I can just react also on the last point from Valerie, and it's true that the dissent from investor is partly relevant for family-owned or state-owned companies, and sometimes you might see a resolution that has been passed by 90% of the vote, but if you have a majority shareholder, it could mean that there is a large dissent level from your non-majority voting shareholders, which can tell a lot. So I think that the scrutiny over dissent and especially on controlled companies has been grown a lot, and expectation from investor to see company reacting when there is a high level of dissent is something that is really new for the last 2-3 years in Europe, in US, maybe starting in Asia, and it's really something that will change. So if I'm coming back to your question, Sheila, on the way we have been changing our approach toward proposals, shareholder proposal especially, I mean, if you look at 10 years ago, we would not have considered at all filing a proposal. For a large organization like us, I mean, filing a proposal 10 years ago was an activist campaign, was not for us. I mean, I remember discussion saying, well, we're not an activist. We're an active shareholder, but we're not an activist. So no way to file shareholder proposal. That was probably 10 years ago. I mean, this debate. 5 years ago, we started to file proposal. I would say by an open window that started to have, especially the Aiming for A initiative, where we tend to have transparency requests. Coming back to the earliest point, I mean, it all started with data. We were clearly lagging data, still lacking data, but that was partly true 5 years ago. So the first ask was more transparency on climate change, and it was collectively. It was doing collectively. It was quite often also with, I would say, kind of the blessing from companies saying, okay, well, you can ask indeed, I mean, more transparency, and we're happy to provide that. And so it started with transparency, working collectively 5 years ago for us. Then it moved a little bit further on. We have transparency. We had, I mean, I think the big shift was also the Paris agreements to say, okay, well, we're going to shift also a little bit more the demand towards Paris agreement, respecting the Paris agreement, or strategy towards aligning the company strategy to the Paris agreement, and also starting to develop in 2020 individual proposals. So on our own, not collectively, starting to file proposal at our names in the US, because it's easy in the US to file proposal, and we started to file proposal related to climate lobbying, so climate change, but related to climate lobbying, to making sure that the company, I mean, to evaluate how the company's climate lobbying activities, including through trade association, is aligned with the Paris Agreement. And we started to file proposal, and that's what was interesting in this strategy is, first, I mean, we filed last year at 4 companies. We had a majority approval at Chevron, 53%, when we have two companies where we didn't have majority approval. This year we filed 2 other proposals at Exxon and at Delta, and we gained majority approval on both of them, so at 64 and 63%. And we had other investors that filed similar proposal with other companies that also received majority proposal. And I think that this year has been historically a year where we have seen the most majority approval of shareholder proposal. And George mentioned in Gen 1 Exxon cases also. So I think that there have been important shift towards having large asset manager like us that are ready to file proposals. That it was not the case before. Large asset managers that are now supporting more and more environmental and social proposals, like the example that I've gave, which are important trends on the last this year and last year. But I think that what I might want to end here this question is for us. I mean, filing a proposal is an escalation process. And Valerie mentioned you need to take into account, of course, Asia and the specificity, but I think it's true in all markets. I mean, at least for us, I mean, we are not going to go and file a proposal without having tried to get private meeting first, to try to get the answers that we are waiting for through the engagement, classic engagement form. And I think it's worth to mention that, I mean, the filing proposal is going to be not the last result, but really the end of a long process, generally, where we are going to try to engage with the companies, usually for several years on these topics, fail to obtain sufficient results, potentially vote against some proposal directors I mentioned because of those considerations, and at the end go to file a proposal because we didn't have the right answer. And I'm just going to stop there by giving I mean, and there are local differences. In the US, you tend to file a proposal to go to the table to discuss with the companies. In Europe, you tend not to have to go to that path, and you really use it as a last measure. And the proof is that Climate Action 100 in Europe this year, there was no proposal in Europe. Not because there was no engagement, but just because all the specific demands that were requesting to companies at the end received positive outcome without the need to go through a shareholder proposal.
Okay, so that means that in the US, for example, you file your proposal to put it on the table and then have a discussion, and maybe the company agrees and will and you might take back your
Exactly.
proposal. That's the mechanism.
Shoot first and then speak.
But don't shoot in the head. No. Okay.
No.
I have a couple of questions. So I think George touched on this subject right at the beginning around bondhold. That we can also start engaging as a bondholder. And so I have this question about how far a bondholder can give impact to company's operations. And the follow-on question is based on your experience. Is there a minimum level of ownership, whether in equity or debt, where investors' concerns will be more or less heard by the board of directors? Mm-hmm. So I don't know if you can kick that off, Michael.
Sure, I can kick off on the second one quickly to say, I mean, there is no minimum, and almost because as Engine 1 in Exxon has shown, I mean, you can also, I mean, us at Exxon, we are a small shareholder and we filed the proposals that gain majority approval. I mean, you can be small and still have an important impact, especially if you go to the path of filing a proposal. If you gain a majority support from majority shareholder, even if you are really small, you can have a huge impact. Of course, it's easier if you're bigger to speak with companies and to engage and to be received by companies, but nevertheless, I mean, you can be impactful through techniques like the one that I've described, even if you're small. And okay. On the first one, maybe I will let Valerie or George answer, or I can, but I don't want to.
Valerie or George, you have an opinion on how far a bondholder can impact a company's operations?
Well, I'll give a go at that. I used to be a Standard & Poor's for a long time, so the bond market is something I've worked with quite a bit. And it's not obvious because bondholders don't have the same types of rights that shareholders do, particularly voting rights. But I would argue, as a credit-trained banker, that the creditor is ultimately the bearer of residual risk. So I think that the creditors do have a legitimate financial stake. And sometimes their issues and needs may differ from shareholders, but there's a lot that they have in common with one another. Bondholders and shareholders want companies to be well managed. They want risks to be sorted out. They want them to be transparent. And so there are common strands between creditors and shareholders where adding a bondholder voice to this perspective can be helpful. And that's particularly true in companies that are not necessarily looking to issue new equity capital. In those sorts of situations, credit bonds are the source of new capital to the company. I mean, sometimes they're issued, repaid, and then they sort of they're refinanced. But creditors sometimes have a stronger role to play than people would think, just because creditors often haven't used their rights in an engagement type of context. But we've put quite a bit of work into this topic, and we think it's very important. And I think that the creditors have a legitimate right to engage with companies. They have a legitimate right to have their interest looked after, and I think it's an important thing that creditors become part of the stewardship world, because particularly, again, if you have equity that's already issued, it's the bonds that are basically the source of new money for companies. So they actually plays a strategic role, whether companies or the investors themselves actually would give credit for that. But this is something that I think is building in many investment firms, I'm sure with you guys as well, in terms of just how do we approach these types of issues. And I think it's still a journey. It's further to go. We're much further along in equities than we are in debt, but I think that there's a lot of people doing very good work in the fixed income space with regard to stewardship.
Yes, because on the fixed income, you have two moments where you can really have an effect. That's when there's a new issue and you might have qualms about the company at that point, whether you're going to invest. And then when there's a restructuring, I think it's more difficult to, you have less of, there's less of an escalation process possible if the bond is being held and the interest is being paid in a normal way.
Yeah, and sometimes, as you say, voting is not exclusively for shareholders, because, creditors will have a vote too. But as you say, that's usually in situations where there's a problem happening. There's something going wrong, and whether it's default or restructuring, but investors do have a vote, and that can be very important. Bond investors have a vote, yeah.
And maybe
I have another. Oh, sorry.
Yeah, just add quickly the tendency with green bonds or social bonds or thematics bonds that have been issued quite a lot recently by debt has been really a tendency to helping tools to engage as debt holders, because you tend to have a lot of companies that were emitting new green bonds, and that were searching also for this engagement. And as a debt holder here, you were discussing especially the sustainable product that were part of the green bond. So we have done, I can give this background that on the last few years, we have done a lot of engagement as a debt holder, especially on the green bond field when there was new emission, but not only.
Yes. Okay. Thank you very much. And a question now for Valerie that comes from the audience as well. Many Asian companies have been more responsive to engagement by their clients. Is it possible that Asian companies are more responsive to engagement by clients than by engagement by investors? Do you think that there might be more scope for more influence through procurement rather than as an investor? What do you think of that, Valerie?
Yeah, thanks. I think that's an interesting angle. We certainly I think what would be interesting to do is to explore into more and more different angles of engagement, because the truth is, as I've sort of reiterated quite a few times, Asia is very diverse. We have different strategies that are being deployed. And what I'm really getting at with that is, for some of the markets or some of the companies, the regular way of engagement between investors and companies, it's how should I put it? It's quite sort of going as expected, and there are conversations that are being had, but there are also companies where there is a lot, sort of a high level of resistance. And for such circumstances, I think certainly the investors, we try with different sort of contact points to access the companies in order to have those conversations. But this suggestion as to going through the client side, it's definitely also worth considering. But sort of what we need to be mindful of is to, as we engage as in a collaborative sense, there are usually quite variance. There could be variances in the expectations, and sort of managing that process in the engagement with the companies probably is something to think about as well if we were to deploy such a strategy.
Okay, and we're nearing the end of our session, which has thank you, has been very interactive. But I'd like to wrap up with a final question. We have, as I mentioned earlier, we don't have 50 years. We have 10 years to arrive at a reduction in CO2 emissions. Reduce them by half by 2030. So I would like to go around the three panelists to see what you think the main levers are at our disposal as investors, or maybe even as private citizens, to put all the chances on our side to effectively reduce the CO2 emissions by half by 2030, to be able to trend towards zero by 2050, which many people are aspiring to, but are we going to get there? So maybe I start with Valerie, as we're still on you.
Right, sure, thank you. So I think for me personally, I think it's very interesting for us to always stay up to speed with the discussions around the developments of net zero technology, because I'm sort of coming from the personal level now as to what we can do. Perhaps not specifically as a result, we'll be able to cut emissions by half by 2030, but I think being cognizant of where developments of these net zero technologies are, on the one hand, it's fascinating. On the other hand, it gives us a much better context of what that really means in the grand scheme of things, especially on carbon reduction for hard to abate sectors. And having that understanding, we probably will then come to realize that there really is a clear need for us to front load as much of the emission reduction as possible. And I think this will make people start to think a little bit about how they should sort of prioritize their lifestyles and sort of general priorities on sustainability. And
on the investor level, how, I mean, of course, there's Climate Action 100 plus. Is there more that can be done?
On the investor level, definitely the key movers are, there are asset owners who are really proactive. And I think coming from a regional perspective, having that conversation with Asian asset owners as well, making them the key sort of, they may not necessarily be the key driver, but having their input will go a long way in pushing along some of the speed of progress that is needed for Asia. So mobilizing the asset owner group within Asian investors, I think that also is critical.
Okay, thank you. George, do you have some wise words for our listeners and viewers?
Well, I think I think we know that engagement in stewardship it's a bunch of tools that you can use. It probably starts with dialogue, and then, as Michael said, you can escalate with share proposals, use your vote, and the like. And I think that each company's situation is going to be different. And we don't know a lot about stewardship in terms of what works and what doesn't. It's a young discipline, and we're still making our way here. But there's one piece of scholarship that has come out, which I think is useful. Is some researchers at Cambridge University in the UK have done some research, and they define one of the most useful or successful patterns of engagement is when you have joint engagement in a country where you have a local player, let's just say it's France, and BNP would be engaging a French company, but also together with overseas companies as well. So you're sort of representing the voice of the overseas capital market on the one hand, but also the domestic market on the other. And it's been demonstrated, through econometric type of analysis that when you get investors having the overseas local teams working together, that could be very effective in terms of shaping, getting attention of the company and being in a position to provide meaningful guidance. So hopefully we can, think intelligently about how investors can work together in these areas. And I think that probably collaborative initiatives are likely to have the most strength because they're going to be representing the most amount of capital on the table. So I'm not sure they're wise words or not, but I think that investor collaboration is I think probably one of the most, sometimes it's not easy to do, but I think that's one of the best opportunities that you have.
Okay, thank you very much, George. And we have a couple of minutes, Michael, so you can tell us. I know you come after two very good answers, so I don't know what you're going to say that's new, but maybe you could talk about the man in the street as well, not just the investor.
Yeah, sure. So can talk about both. Quickly from an investor perspective, I think that you have several tools. We discussed the stewardship angle because it was a thematics, but there is not only stewardship that here needs to be taken into account to address climate change, especially, but not only. You need to integrate ESG on your investment. You need potentially to exclude. Exclusion is part of the strategy that sometimes can be interesting and a necessity. You need to have thematics product also, and you need to invest in the companies and in the strategy that will fight climate change or trying to find solution. So that's a whole package where stewardships need to be there. On the ESG integration, on exclusion, on thematics, needs to be there, but it's one of the tools. It shouldn't be the only tool that investors are using, and it shouldn't be only to climate change. I know that yesterday there was discussion on biodiversity, but there are other factors, and biodiversity is clearly one of it where trying to find and replicate what Climate Action 100 has been really successful, and to find a potentially similar approach to tackle also biodiversity. You shouldn't tackle only climate change solo, and biodiversity is a good example. And as a citizen, as a client, as a citizen, you have similar action through the way you're going to consume by product, where you're going to invest your money, hopefully, also that will take into account sustainable issues.
Yes. So thank you very much to all three of you. We've reached the end. I think I would have loved to have talked about biodiversity, Michael. We would have loved to have gone more deeply into Asia and hear a lot more about George's policies, but we only had 1 hour. We had you three speakers, so I think we've covered quite a lot of ground. I hope our viewers have at the conference have found this interesting too. And so thank you all very much for being here and for accompanying me on this panel.
Thank you very much.
Thank you.
Thank you.
Thank you.
Thank you all.